speaker, a public speaker, but not only that, he loves helping people. He has a tremendous amount of, he loves to give and he loves to share his wealth and knowledge with those around him. So join me in giving a virtual round of applause to none other than Mr. Richard Hardon, all the way from Stone Mountain, Georgia, which I just drove from. Go ahead, give it up. I'm going to turn it over to none other than Mr. Hardon. Mr. Hardon, the call
Stone Mountain, Georgia in the building. Now, I'm going to let this poll continue for just a few more minutes. And in addition to letting the poll go for a few more minutes, any of you that are my friends on Facebook or want to start a watch party, Facebook and Zoom are agreeing today, so we are live. Feel free to start your watch party as I tell you about who just introduced me. Because when we talk about real estate professionals making a difference, doing things in a different way, I couldn't be prouder to have someone call me friend than Natasha Johnson. Because here's the exciting thing. She said all those good things about me, but she did not tell you her name. But let me tell you, in a very short period of time, Natasha has found a dog. Somebody find whose dog. Is that my dog barking? Okay. Natasha Johnson has not only distinguished herself as a licensed real estate professional, she is a certified luxury home seller, a certified seller's agent, and most importantly, she helped me make money off my investment property. So if anybody deserves those accolades and a round of applause, y'all give it up for Ms. Natasha Johnson. Yeah. Now, as we go through this conversation, here's what my goal. As I got together with the folks that I've been blessed to partner with, we started really having those conversations about real wealth. Now, if you're on this call tonight, I make the assumption, yes, the recording is on. Thank you for reminding me, because that's important. We do want to make sure that everybody gets a chance to hear what's happening. Because I'm one of those people that always wanted to be wealthy growing up. How many of you wanted to be wealthy when you were growing up? Matter of fact, wait, was that thumbs up, hands up? Let me see something. Because if you didn't want to be wealthy, don't tell me what that was. Because my friend Sean Hill says that is contagious. It'll get in your clothes. But here's what I understood. I did the things that they said to do in America in order to create wealth. They said you need to go to school and get good grades. You needed to go to college. You needed to get a good job with benefits and live happily ever after. How many of you were told those things?
Yep.
And somewhere in the middle of that American dream, you were supposed to buy a house, have 2.5 kids and a picket fence. And that was the formula. But what I found was my 2.5 kids rounded up to 3. And every time my kids breathed, they got more expensive. And the house, it got to be the biggest expense in my life. And I just found myself in that frustrated place like, this isn't what I wanted. I wanted to be wealthy. But what I found was that the education that I provided, because here's the great thing, going from high school to my senior year, I didn't get any grade below a 93. So for years, they called me nerd, geek, bookworm, all those things. Got out into the workplace. Got to valedictorian at my high school, graduated, went to Duke University. So I was a double major. I did electrical engineering and computer science. I got both in 4 years. Got out into the workplace and made good money. Let me make this clear. I made good money in my jobs, but here's what I found about my jobs. They were designed to keep me at work. Meaning the more, anybody hear the saying, the more you make, the more they take?
Absolutely.
So I started a search to find out, to understand money, to understand how it worked. And as I started finding things, I started finding myself attracted to different people. How many of you know that if you put yourself in a situation where you are looking for something, that the people that can provide it start to appear in your life? And so during my quest, especially knowing that real estate was a part of what I was interested in, because I started studying the wealth gap. Write this statistic down just so that you get it. In my community, they say there's a wealth gap. And the reason that it exists is because 2/3 of America's wealth is in real estate. And on the whole, we owe too much, but we own too little. So I started looking for professionals that really understood this whole process of real estate, buying, selling, investing, and profiting. And I started finding myself surrounded with people like Natasha Johnson, like Dana Turnquest. Hang on, let me add to these folks so that everybody gets to see who will be helping me with the conversation today. Like Stephanie Stewart. And where is she? That is none other than Yaz Anderson. And who am I missing? I got one more perk. There he is. Turnquest in the house. So let me introduce each of them and their specific expertise, and they're going to join. They'll be back for specific parts of our conversation. Now, you already heard from Natasha Johnson. Natasha's licensed realtor. She helps people in the process of home. She specifically focuses on luxury homes. So if you need $1 million house on the lake or on an island, she knows how to get that for you. At the same time, so she's based here in Georgia. Stephanie Stewart is based in Milwaukee, Wisconsin. Stephanie, wave your hands around. Stephanie has patented the brand Educate to Own. When we first met, she told me about how people in our community were systematically undereducated in terms of what it took to even be in a position to buy a home. Mm-hmm. So in her brand, her focus is helping people learn what to do to qualify for the home, buy the home, pay off the home in record time so that they have money to invest in the next home.
Right.
And then my friend Yaz Anderson, let me tell y'all something. Man, listen. Yaz is what we call an investment real estate coach, meaning I wish on that first purchase that somebody could tell me what to do, but more importantly, tell me what not to do. Because I remember I bought that first house in 2002. I thought it was going to be me and Home Depot, but it was me and Home Depot and a contractor. Anybody ever hired a contractor and fired them with explicit words? Well, he called it a cease and desist order, but in my mind, I was very East Point. But so that is Yaz's brand, profit from property. Just teaching people how to have real estate, not just something that sits there in a state, but creates an estate for you. And last but not least is my brother, Dana Turnquest. Man, Dana is the world's most interesting man. Y'all, if you don't know him already, follow him on Facebook. You'll see this man jumping out of planes, jumping off the deck from his house into his pool. Yeah, he has a house with a pool. But building multiple streams of income through investment. He's one of the most shrewd financial minds in this industry. And I'm just proud to be in business with all of those folks. And because of all the things that they know, that reduces the amount of presenting that I have to do. Because this is what we're going to do. If you're taking notes, make sure to jot these things down. We're going to talk about 4 challenges, 3 solutions, 2 goals and objectives that everybody in America has, and 1 company that's making it real. And as a matter of fact, today, we're going to focus on what we do for people, specifically when it comes to the real estate purchase process. And so as a matter of fact, let me put the spotlight on somebody that might be a new voice for you now. But man, if you understood her heart for making sure that people understand what's holding them back from buying property, putting them in a place where they know better so they can do better. Just wait and listen. It's Stephanie Stewart. Stephanie, let me pull up the slides for you, but tell people about the challenges that we face when it comes to actually getting into the position to own property in America. Is my screen sharing okay on your end?
Mm-hmm, you got it.
Yes.
All right. So Stephanie, the floor is yours.
I just want to say thank you, Mr. Hardon. That was a great introduction, and thank you for definitely sharing my brand. You've taught me definitely a lot in a little time that we spent together. Some of the things that I've noticed is people are not educating. So one of the 4 challenges that I definitely, it's not loading. Okay. One of the 4 challenges that I really want to start with is inflation. Inflation is a silent income killer, which that means is that the price of goods are going to go up and we can't do anything about it. One example I have is I went to go buy sushi today and some milk. I planned on it being about $20, maybe $30. That easily became an $85 bill for absolutely no reason. And it's something that I really can't control, but it's the cost of life right now. Another issue that we have in the world is taxes. It's about 1/3 of our income right off the top. So if I make $100,000, that means I'm only coming back with maybe 60, about 70, just because the government says, I want my money now. Chainsaw massacre, it doesn't matter. And that's one thing we really can't do. But there are some other challenges that we also face, such as debt. You know, when you buy something that you really didn't really need, but you keep buying it anyway, you got credit cards on credit cards, but debt is definitely a curse. And sometimes it goes through our families, through multiple generations. Pawpaw bought a house, Pawpaw left the house to you. Next thing you know, you paying for a house you couldn't afford on the lake because back in the day, he bought it for $2.50. In addition to debt, we also have big business. Big businesses are your things like Christmas, Thanksgiving, all the holidays that we're about to get in within these next upcoming months. That happens every year. That is just another way to take another third of our income.
Awesome. You're transitioning back?
Oh, I'm sorry. Yes. I was like, I don't know what the house is. What does that mean? So in addition to these 4 challenges, these are all problems that we have to face every day, that we face, our clients face, everybody everywhere can face. So I joined with this team to find some solutions to our headache, our migraine, and it's a solution kind of like a Tylenol. Richard Hardon, you are free to carry on.
Awesome, awesome. So again, just to put a bow on what Ms. Stewart shared, because you got to think about where we are in our world today. Most people have 4 problems that are actually transparent to them when it comes to money, making money, and have that money making money. Meaning, how many of you, before we really looked at this, were aware that the 2 biggest bills in most people's house aren't bills that they're conscious that they're paying, meaning taxes and interest? Does that make sense?
Yep.
So our solution, by the way, we didn't get on here to talk about doom and gloom. We're talking about solutions, but in order to solve a problem, you've got to understand the challenge. Does that make sense? So
Yes.
as we get into our conversation today, here's the thing that I want to focus on. And you know what? I think the most important shift that anybody can make when it comes to income shifting is first to have that shift in mindset. Meaning, if you think about, just characterize for yourself the difference between an average realtor and a wealthy realtor, right? Meaning, average realtor is somebody that's transactional. They meet somebody, they sell a house, that's the end of the relationship. But wealthy realtors are relational. They build relationships with people, understanding that it's not just what you know, but who you know that helps you make the money. Average realtors sell houses. The wealthy realtors, though, they're trusted advisors. Average, scarcity. Wealthy, abundant. Average realtors think they can do it all by themselves. How many of you know somebody that thinks they can do everything all by themselves? Mm-hmm. Wealthy investors leverage a team. Average investors, average realtors, they know everything already. I mean, they got a license, right? But the wealthy are always learning and growing, doing new things on a daily basis. Average income focus. How much money can I make? How many houses, how many units can I move? Wealthy cash flow focus. How much can I make? But how long will that last me? And everybody, not just average realtors, everybody wants to be wealthy. But wealthy realtors actually have a plan and a strategy to create wealth. So quick question for the people here. Would you rather be average or wealthy? Let me look at you in the eyeballs is what my daddy would say. Let me look at y'all.
Wealthy.
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 I got slides, but I do want to talk to people about what they want and understand that if your goal is wealth and you weren't born wealthy, because in America, statistically speaking, there's a good chance you weren't born wealthy. It's just the way that it is. But you can create wealth in your generation if you have a strategy, a plan, and you act on it. And I'm going to talk about the strategy that changed my life. It's called income shifting. Everybody write that in your notes, income shifting. Income shifting. 3 strategic components when it comes to income shifting. We're going to talk about increasing your cash flow, building a business income, and generating investment income. Again, these are the 3 strategic solutions. Now, the brilliant thing about what we're doing as a movement is we are executing these strategies concurrently, not consecutively. What does that mean? At the same time. Make sense? So how does that start? So here's the thing I want people to understand. When it comes to income shifting, the reason that this is so vital is that by increasing cash flow, we help people overcome the biggest challenge you face. Like if you really think about it, it's inflation and taxes that actually cause debt. Yes or yes?
Yeah.
Yes.
I mean, people would have more money if the government wasn't taking so much from them, because if you have a job and that's your only source of income, or if you're taxed 28 to 33% and taxed up front. So we got to minimize those taxes, because you can never put enough money in the bucket to not have to work if you're bleeding a third. Does that make sense? Now, in addition to minimizing taxes, we help people minimize expenses, minimize debt, increase the credit score, which increases their buying power, but at the same time lowers the expense of what they get if they invest in the right things. Now, at the same time, if your source of income or one of the sources in your home is a W-2, you need a business income for 2 reasons. Number one, businesses get taxed less and they get taxed last, meaning a business owner gets taxed 18 to 23% in most scales, but it allows you to be tax efficient. The things that we do allow us to write off a part of our lifestyle, so that now a portion of your home in the home business arena, your mortgage or rent, lights, utilities, security, internet, cell phone, meals, those become deductions for you. But then we focus on shifting some of the cash, some of the money that we got from increasing our cash flow and the money that we got from building a business income into investment income. Why? Because investments are taxed least and least frequently. Capital gains tax less than 15%. And we also focus on investing in real assets like real estate and being your own bank. And the realest investment you can make is the investment that you make in yourself. Am I making sense so far?
Yes.
Questions on the process?
Yes.
So as we go through here, let me teach a lesson. Let's talk about cash flow. In the garage. Sorry about that. Cash flow. Because here's something that we had to get an understanding of. Now, Dana, I don't know if you were like me, but there was a time in my life where I thought income and cash flow were the same thing. And that was the heart of my misconception. Meaning I always thought my problem was how much money I made. So my solution was work harder and make more money. But understand this, if you got $1 million income, that's a sky high income, yes?
Mm-hmm.
But if your bills are $2 million, your cash flow is 1/2 period short.
Mm-hmm.
But at the same time, if you make $80,000, but your bills are $40,000, your cash flows twice your period of need. Therefore, you have more than enough and can shift some of that into assets that produce more cash. Does that make sense? That's my favorite phrase: cash, asset, cash. Now, what are you talking about, Richard? Well, it's actually, from a financial educator's point of view, what Rich Dad called the cash flow statement. Now, let me show of hands. Everybody that's heard of a cash flow statement and has an active cash flow statement for their lives, put your hands up. Okay, if you had not heard of a cash flow statement like me, because I didn't, before the financial education started, you don't have to put your hands up, just put your eyebrows up, and let's walk through the concept together. And Dana, you can help with this. Because when I started looking for financial education, one of my favorite books, I read it for the first time in 1998, was Rich Dad, Poor Dad. Sure. Changed my life. Yes? Sure. Now, what he talks about, Dana, in the cash flow statement is 4 categories when it comes to money. And if we're going to create wealth, we have to look at ourselves from the position of how we get into the cash flow quadrant. Now, the first 2, I think most people know, Dana, that's income and expenses, right? That's just money coming in and going out. Why don't you tell them about assets and liabilities?
Well, so the main difference between assets and liabilities, a lot of people unfortunately think that an automobile is an asset because it may have a certain price tag on it. But at the end of the day, if it's depreciating, which means the value is actually going down, it's actually a liability. Here's the tricky part, Rick. A lot of people think that their homes are assets.
Yep.
And as we talk more about credit, because if your credit score is too low and your interest rate's too high, your home can be one of the biggest liabilities you have.
Mm-hmm.
And if you don't understand the ratio between credit and debt and how those scores impact things, then what most people feel, oh yeah, I'll get a house, my house will be an asset, it will be the biggest liability that you own. Assets are things that appreciate in value. So as you own them, they begin to increase in value, right? So you see on the screen here, stocks, bonds, mutual funds, real estate, and business. And even when you look closely even at real estate, there's certain types of real estate that you can get into that actually outpace inflation. So just know the difference between assets and liabilities. A lot of people feel that if they buy something and if it's expensive, that makes it an asset. It should be bringing, and again, Stephanie just said, I was going to say that. Stephanie, you read my mind. Assets bring in money. But I will say this also, there's a big difference between having an asset and having income from your assets also, which is a whole different conversation. I'm not going to go deep into that, but just know that if it's growing and bringing money in, it's an asset. If it's taking money out, meaning that beautiful home that you just bought from Natasha, who helped you get this big luxury home, if your credit score is too low, you're going to pay for that home 4 times.
Yep.
And it's going to be tough to make that an asset.
Yep.
So,
and so make sure that everybody takes away these simplified terms. And when you get done, I want you to sketch out the flow of money in your life and see how it goes. Because make sure to write this down. If you didn't catch this, Dana said it so smooth, y'all might not have heard him. He said, liabilities take money out of your pocket. Assets put money into your pocket. So think about the things that we're told we should do. You should buy a home to live in. You should buy a car. If you got kids, they need to go to college, they need some student loans. Well, those are liabilities, and it turns out they are assets on someone else's balance sheet. They're assets to the bank. But Rich Dad went through 3 cycles. I just want you to think about how money comes into your life. If your only source of income is your job, and all the money goes out through the expense column, that's what he calls the wealth flow pattern, the cash flow pattern of the poor. If your money comes in from the job, goes to pay back your liabilities, your car, your student loans, your credit cards, but there's little or nothing left to invest, that's the cash flow pattern of the middle class, and that's why they're the middle class. But on the left, that's the cash flow pattern of the wealthy. How many of you would love for the things that you've gotten by spending money, producing the money that you spent? Assets producing income is the only path to wealth. Because here's the reality. Let's do the definition of wealth so that we have this elephant out of the Zoom too. I'm not talking about that you necessarily need $1 million. I'm saying that if you have enough income from your assets to maintain your lifestyle without ever working again, that's the definition of wealth. So if you want to be a wealthy realtor, part of what you got to do is make the money that you make selling properties, helping people find homes, but also investing in assets that produce income in addition to the income that you get from the transaction. Am I making sense?
Yes.
Any questions so far? So let's pick this pace up, because now that we know what we do, now we just got to get our financial house in order. Everybody say, get your house in order.
Get your house in order.
And here's the things, because one of the things that I had difficulty with early on in life was knowing what to do. Once I started learning things, I didn't necessarily have a game plan for what order to go in. Once I understood that rental properties made money, I was trying to buy a rental property. At the same time, I had a maxed out credit card. I was still paying back student loans, and I was stressed out. I was going to say the word that goes in the middle, but y'all heard it in your own minds. But there's simple rules of operation. I didn't make them up, but here's what I recommend. As people start to learn about their money, the first thing that you do, you got to have a foundation. You got to build a foundation and have a mindset set for wealth. That's why we started with just the difference between average and wealthy. But in addition to mindset, you need a financial education. Everybody say financial education.
Financial education.
Financial education.
Financial education.
It's not taught in schools because most school systems don't know. One of the things that Dana and I are going to talk about next is when we have one of these sessions specifically for educators, so that more educators will know the rules of the wealthy. You need a game plan, and write this in your notes. You need a team. See, we've been tricked in America into this idea that we got to get wealthy. We got to figure all our finances out. We got to work. We got to be mothers. We got to be everything all by ourselves. But if you look at the wealthiest people in America, all you have to do is look just over their shoulder and you can see the team of people that helps them be successful. Make sense? I mean, think about it. Y'all remember that Oprah Winfrey was a weather woman, right? She was on the news. Now she is the news and owns the network. She has a team. Make sense? Next thing, you need a written budget. Everybody say written budget. Written budget. I've been practicing my grammar, trying to pronounce my T's because I'm from the South. So a lot of times I just say written. It just sound like all one thing. Written budget. And people say, Richard, why are you talking about budgets? That's boring. Because you have to figure out on paper how to live off less than you make. That's how you have more than enough if you live off less than you make. No more than 80% of your income should be consumed by your lifestyle. Does that make sense? And imagine what it feels like if you pay all your bills on one check and have the other check for investing.
Amazing.
It's fun times. But then build a mini emergency fund. Because here's what people do. They want to jump into investing, but they're not in a place to be emotionally safe with the investment. I say get $1,000 to $3,000 that you can put cans on, cash equivalent. Does that make sense? Because here's the trick, Dana. What happens if people start investing, but they have an emergency?
You're going to dip into that fund.
They dip into the investment. Now it's no longer growing. And now they're back worse than they were when they went started, or even worse. They go into deeper credit card debt. And it's hard for a credit card to earn less than your investment. Then that's the next investment I suggest people make is getting out of debt fast. Snowball to debt. There's actually technology in place. We'll talk about how it's working for some of the people on this call to eliminate the interest component, because we're already going to work on minimizing taxes, but you got to get out of debt. And then once you're there, build a true emergency fund. You should have 3 to 6 months of your living expenses in a cash equivalent. I'm sorry, in a bank. I'm sorry. Is that okay? Somebody gets on me about big words. You need 3 to 6 months in case of emergency, in case something happens to your primary source of income while your investment income is ramping up. And then we're ready to go to work. Then we can invest for the long term, because here's my favorite phrase: income is the outcome. How many of you know if you build a money machine that makes enough income for you not to need to go to work, that's how you start to build long-term wealth. And then the roof on the house is having enough money left to give generationally. So not only do you have income for the rest of your life, but the book that we read says that a good man leaves an inheritance for his children and his children's children. All right, so let me pause for a second and let me ask you, what did you just see? Who can tell me back all 7 steps? Without the cheat sheet. Let me get a cheat sheet so you can say it again. What's the first step? What do we have to do first?
Foundation. Mindset, foundation.
Foundation. Got to have that mindset. Then after that, you need a
Written budget.
written budget. And then, and Yaz Anderson always teaches in her finance ministry about the 80-10-10. Making sure that in every category, there's more than enough to take care of. What's next?
Mini
emergency.
Oh,
Mini emergency fund. How much should be in it?
$1,000.
$1,000 to $3,000.
$1,000 to $3,000. Oh, I was talking to Bernard Ponder about this earlier. You know, for most people, the level of your stress is just about equivalent to the amount of money in your emergency fund.
That's right.
So grow it, get it ready so that you know, in case of emergency, you're ready. What comes next?
Get out of debt.
Get out of debt. No credit card.
And then what's next?
True emergency fund.
A true emergency fund. 3 to 6 months of equivalent investing.
Excellent. And then next?
Investing long-term income outcome.
And then it gets amazing. Like this roof part, where you start having money, making money on money. Oh my goodness. Oh my goodness. So that's the formula for how we get our house in order. But here's one of the things that I offer people freely is my team access to my team of experts. Because I got to tell you a story. The rental house that I bought, 1998 was when I started saving money for it. It took me 4 years to put together $10,000. Yes?
4 years, huh?
And I found my first property. It was listed for $62,500. It was an REO, that's real estate owned, means it was a bank held property. Moved in, I needed to do about $8,000 worth of repairs. And from the time that I got it rented, it has been successfully rented for all of the last 18 years. So I bought the house in 2002. And every time it was time to turn off. Now I've been blessed. I have to admit, I've been blessed. I've had tenants stay with me for a long time. I priced just below the market in a nice neighborhood on purpose. But every time my tenants would move out, I would go to the little shack beside the house and get out my for rent sign. I would set up my card table and I take applications. I take applications for 2 to 3 weeks until I found the right tenant, and then they would move into the house. I get the cleanup crew, all the things that had to happen for turning over a house, I did them myself.
Smart.
This year, my tenant, she moved in 2007, she was moving out. She called me to say, well, Richard, I'm finally moving on. I'm buying my own property. I was like, congratulations, but now I got to find a new tenant. I was telling my friend Natasha about it. She said, I can list your house for you. I said, really? Tell me more. Long story short, within a week of me having turned over the house to Natasha, she and her team went out and found probably one of the best qualified tenants I've ever seen. And I didn't set foot in the house till I showed up to pick up the check. How many of you understand that an expert doing that did it faster for me, better for me, less expensively for me, both in terms of my time, my energy, and my aggravation? I needed a team. I just didn't have a real example. Now, how many of you understand that when it comes to our money, somebody that does a thing all day, every day can do it better than you for you?
Yeah.
Yes, sir.
And especially in the case of the team that we provide, because we provide a money team. Everybody say a team of financial experts.
Team of financial experts.
Because here's what I want you to know.
Team of financial
If you've
experts.
got to be your own tax planner, investment advisor, your credit specialist, and your debt elimination specialist, when are you going to do the job that you make the money doing?
Exactly.
Those are professions. But with our team, we're partnered with a team called Make Wealth Real Financial. Everybody say Make Wealth Real.
Make wealth
real. And one of the places where we have focused is in working with real estate professionals, because they often run into people that have a direct need, an immediate, urgent need for the things that our experts provide. Now, here's the concept. We provide a membership. So you become a member of a club that gives you unlimited access to financial experts when it comes to credit, equity, money, and wealth. Write those down, say them out loud. Credit, equity, money, and wealth. It's only $79.97 per month for the membership, and it includes all the services that I'm about to describe for you and your boo. Does that make sense? So the first thing we talk about when it comes to purchase a house, because I remember when Natasha first approached me, she said, you know, well, I've got someone that wants to buy a house, but their credit's not in shape. Could you help them out? And with Credit Max, that's the thing that we do. Our Credit Max specialists, we average 50 to 150 point score increase, 25 years of experience. We're both RESPA and Credit Reporting Act of America compliant, 100,000 plus satisfied clients, including me, and the Spotless Better Business Bureau record. But rather than describe it, there's plenty of people on here that have had a chance to leverage Credit Max. Who has a Credit Max testimony? Tell us your name, where you are, and what Credit Max helped you do. I see, is that Latrey?
Latrey.
Latrey, let me put the spotlight on you. Hey, tell us what.
Hey, y'all. I'm a Credit Max customer. I just checked my I got an email today from Smart Credit, and I got my membership back in July, and it's October, and I think my credit score has increased at least 60 points since then.
How many?
60.
60 points in only a couple of months.
I was on the low end, so now now I'm you know what I'm saying, I'm passing. My daughter said I got a passing grade.
Awesome. Everybody give it up for Latrice, because here's the thing that I want to build as a culture is just getting used to bragging about different things. You got so many people bragging about their new shoes or their new clothes. We talking about new credit scores.
Yes, sir.
All right, who else?
Hey, Rich, I'll go. In the last 32 days, they actually helped me increase my credit score by 58 points.
58 points over the last month and a couple of days. Awesome. Give it up for Bernard.
I got one.
Who is that? Is that Bruce?
Bruce.
All right,
So
let me put you on the spotlight. There you go.
Awesome. When I first entered in my stuff, or part of my stuff anyway, went up 15 points right away. I'm on schedule to do another 80 points in the next 3 or 4 days. I just paid off my student loan, so by the time that cycles through, it'll probably hit that 80 spot jump, and plus another 7 or so when this credit card gets paid off in a couple more days.
Awesome. Now, and I guess we got so many testimonies. Give it up one more time for Bruce, because here's what I want you to understand. It's not just about the credit score, but credit score dictates a lot of things, yes? Meaning the higher your credit score is, the lower your interest rate is. That means the house that you buy. A lot of us end up buying a house 2 and 3 times because of credit that just is a little bit damaged, where just another 50 or 80 points could save you hundreds of thousands of dollars. In my case, once the experts went to work on my credit, when my credit score went up, I was able to refinance my mortgage from in the 5s to 2.6. That saves me $750 a month in cash flow and $100,000 over the life of the loan. Does that make sense? So that's one of the, but now here's the second thing, because most realtors will come to me with people that have a credit problem, not thinking about the overall financial fitness picture. Because a credit score is a lot like a temperature. Meaning if you got a fever, there might be some underlying infection, either in the amount of debt that you have or the amount of money coming into your house. So our financial edge gives people a full financial fitness picture where they go to work on the places where people struggle when it comes to finance. So in addition to helping people get their credit in the best shape ever, oh, by the way, you get all this stuff, free credit reports, tracking tools, etc. But the next thing that we go to work on is that debt to income ratio. See, a good credit score will get you pre-qualified for a mortgage, but a good debt to income ratio will get you through underwriting. Am I making sense? And so we put together a customized plan for people where they go through all the process, and it takes every consumer's Equity Max plan and looks at the total they owe, what they're paying in monthly expense. And get this, with the same money, puts them in a position to pay that off in record time. So instead of 29 years in debt, you got somebody out of debt in 7 years and 11 months. So we save them both time and money. They say that time is money, but that's not true. Time is time, money is money, and time is more valuable than money. Does that make sense? Over time, saving people hundreds, but you know what? Rather than me go through this example, two people, let me know the difference in time and money that Equity Max saved you.
I know for me, I started off at 71 years. After I uploaded all my stuff, it took it to 17 years. Most of that was student loans. But student loans are something that has some of the biggest interest rates. And when I found a team that could help me with that, I'm winning.
Awesome. So you went from 71
years.
71 years down to
they helped with my student loans. Yep.
Wow. Anybody else? And that'll be out of debt completely, all of it.
That's all of it. All of it.
Okay. And did I see Tequila?
It cut out. I don't know what you just said.
Oh, I thought you were applauding. You weren't saying you want to share your testimony. My bad. We can't have fun and make money at the same time.
Right. I went from 13 years to 3 years.
Wow. So it saved you 10 years.
Yeah. And actually it was, I want to say it's going to be less than that because the experts gave me 3 years. However, it's down to almost 1.5 because of the plan they gave me. I'm aggressively playing it off. So
awesome. Sometimes all we need is just somebody to look at it different and give us a game plan. Isn't that right? Anybody else? Oh, I did say two.
When doing Dotson, we came into our home And our credit scores was excellent because we moved from New York City here. We put 2 kids through college, but the loan that the experts gave us, the plan, I paid a 30-year off. We've been here 16 years. My house will be paid off in 8 years.
Awesome. 30 years down to 8 years. See, this is the kind of thing that just having some people in your corner working with you does for you and your customers. Because imagine as a realtor, now you're helping people qualify, but also helping pay that house off, creating new equity so they can invest in the next property that pays for the next 2. Come on now. And then we talk about money max. Now, here's one of the things that I love for people to understand when it comes to money, that there are strategies in place to help people get money back from their jobs. See, for the average realtor, well, you're 1099. You can write off your taxes as long as you are good at accounting. Now, here's the thing I know. The next time that I meet a realtor that's a really good accountant will be the first time. It's one of those things, but here's what I found is that a number of the realtors like Stephanie, and you can tell them about how this worked for you, and Natasha, use TaxBot to track their expenses, their mileage, all of the things that are normally tedious. Now they've got a little automated digital assistant that keeps track that all they have to do is take a report to their tax professional. But the other category, if you know, because how many of you know that most of your clients have jobs? Those jobs pay W-2. Mm-hmm. We actually have a team of professionals that helps people get their taxes to be efficient. And in general, that increases take-home pay from their job. Now, Yaz was telling me the story of she and her husband, where she is the entrepreneur and he has a job. Tell everybody what you shared with us earlier, Yaz.
Hey, everyone. Good evening. Thanks again, Richard and Natasha, for having me. And Stephanie, you guys are doing an amazing job. Thank you so much. So yeah, guys, I got started with this business about 10 months ago. And as Richard said, I am a full-time entrepreneur. So for me, the Money Max helped me as far as just like the realtors on the panel with tracking a lot of my expenses. So as he said earlier, I am a real estate investing coach. So what I do is I drive a lot on a daily basis. I'm able now to write those miles off. I'm driving for dollars every day, looking for those best off-market deals for my clients. Not to mention the host of other things I get to write off because it's a home-based business. But the biggest thing for us was for my husband, who does work a job and is a W-2 employee. I'll tell you guys a brief story about us. Before we got married, he was a single man with no children, and he was taxed heavily working in the construction industry, especially during this current time with the pandemic. He was working many, many, many hours as a pipe welder at a nuclear plant here in Augusta, Georgia. So the more he made, just like you said, Richard, the more they would take because he had nothing other than the basic standard deduction. But now he's in business, with his wife. He really understands now what it is that I do and the concept, and he's totally on board because he was able to save, $2,400 a month in tax savings. That was about $580 a check, Richard.
Wow.
Yeah.
He got $2,400 back from the IRS into the household. See, understand this, especially if you're trying to help somebody buy a house. What if an extra $2,000 started showing up in their paycheck because a team of experts helped them get their W-4 adjusted? It was like deals get real different once you got your down payment and your debt to income ratio right. Come on now, that's winning, yes. That's one of my favorite stories.
Let me just add this. That was last year, like I said, I got started 10 months ago. So we got the extra money. We were able to use that money to tackle debt and to get into our first home. I'm happy to say this Saturday makes 1 full year that we've been in our new home. So this system has been, like I said, life-changing for us personally and professionally in business. So I want to absolutely invite and welcome you all to take advantage and take action with this opportunity and this information.
Outstanding. Thank you so much. So again, we've talked about credit. We've talked about equity. We've talked about money. But the last pillar, I think, is one of the most important ones for our overall purpose to get here. Because if you think about all the things we talked about so far, all of that was getting our money back. We're getting our money back from the IRS. We're getting our money back from the banks. We're getting our money back from all the people that are collecting in bills. But now, here's what we got to learn that we really weren't taught. Money is a tool. It should do work. Most of us were taught to have our money work for someone else. It's either we're paying the bank's interest or we're letting them work our money while we get pennies. Because check this out. Now, I'm going to ask Dana Turnquest to talk about Wealth Max, but I want people to understand what this is in comparison to. Meaning, if you think about right now, the bank where your, oops, not Facebook. Facebook is not a bank.
I'm sharing.
But if you think about where your money is right now, I just looked up for today, and if you go to depositaccounts.com, you can look up for wherever you live, based on how much money you have, what interest rates are available to you at all the online banks and all the offline banks. Now, I want you to see something. If you have $25,000 in savings, by the way, I know that's the trick point. If you don't have at least $25,000 to put in savings, you don't even qualify for these, right? But if you do internet banks and online banks, the highest interest rate any bank is paying in America right now is 0.7 or 0.8%. That's less than 1%. And that's the big accounts. If you look at where most people are, what do you say average American needs and savings? Let's say that you got your mini emergency fund at least. Let's say you got $3,000 you want to put in the bank. Watch this. If your bank is in any building that you can see in America, if you look at anybody with a local branch, what do you see here? Everybody, tell me when you see a high number.
0.08, geez. 0.01.
Did anybody see their bank on that list?
That's awful.
Now, grab a calculator because I want you to work this out. Because here's what I do know. How many of you know that the banks loan money?
Mm-hmm.
And they loan money at 6, 8, 12, 24%, and they're over here paying us pennies on pennies. But all you got to do to see how hard your money is working for you is divide 72 by your interest rate. Now, if anybody out there is banking with a company that rhymes with Nels Bargo,
really?
Not even a rhyming.
That money's going to double in 7,200 years. But with Wealth Max, we got the opportunity to have investment advisors that taught us about things. And one of the most important things we can do is be our own bank. Does that make sense? Now, Dana Turnquest was one of the first people that I talked to about private reserve accounts, having just set mine up. Dana, why don't you tell them how this works and why this is powerful, especially if you're in the real estate game?
Well, I appreciate the opportunity, Rick. I mean, you've done so much for me and my family. I've been thanking you since day one. Your leadership and you going ahead and leading from the front and doing this stuff made it real easy for me to understand this too as well. So I appreciate you, brother. And the idea behind private reserve accounts is, number one, they've been around forever. Wealthy people and corporations have been using these type of insurance-based accounts to park and protect their money forever. They just have not been accessible by the common person like myself. And all I had to do, because of making wealth real financial, was schedule a consultation. You heard many folks talk about the other services. With this, you schedule a consultation. Actually, while we were on the phone, I was actually texting my financial advisor. And I set up the consultation because I understood really quickly that I could not make money just putting my money in a savings account or even with a 401k, especially during quarantine. If anyone saw what was going on with 401ks and 403bs during the pandemic, they were earning negative percentages. Here's what I understood about private reserve accounts. They're connected to the stock market, but only when the stock market goes up. If the stock market dips, your money stays flat. So if you put 50,000 in there, it will never go below 50,000. The market could crash and your money will be here. But once the market picks back up, you start to earn interest again. Now that's a powerful concept because now your money is protected from the market. Here's the other piece. It's also protected from taxes. If I decide to take money out of my 401k, not only is it I have to pay fees on it, but I also have to pay taxes on it. If I decide to use some of the money that's in my private reserve account, and here's what you have to understand if you're a real estate investor, you can take that money out as a loan. It's similar to how you would refinance a property and take money out of the property. This works in a similar fashion where you're taking out a loan against yourself. The only difference is you set up the terms and you set up the rate. And now because you're your own bank, just like a hard money lender might be, you can use that money. So if you have $100,000 in this account and you need $20,000 for a down payment on another house, you can take that money, put that money in as a down payment. Your original $100,000 is still in the same account, still earning interest. Your money is now serving two purposes. So you have your original investment that's serving its original purpose, which is to go up with the market. You're using a part of that. You didn't pay taxes on it. You didn't pay any fees because it's your money. So all the while you're putting your money in bank accounts, it ain't your money. Because once they get it, they shipping it out. They
Right.
The first chance they get, they shipping it out.
Man, I think, Dana, if people just got that, I mean, imagine that scenario. You saved it. I mean, you saved and invested. It's growing because here's the other thing, that growth rate, we're at like 12 and 14% versus 0.01. So the money's doubling on itself every 6 to 8 years. And you can be your mortgage lender. Come on now.
You 0.01 on savings account, but 401ks are negative.
Negative.
Negative 5.
Right.
Powerful.
Awesome.
They play in submarine. They've gone past tanks.
What's that?
I said they play in submarine. They've gone past tanks.
Richard, check your text.
Awesome.
That's awesome. That's awesome.
Awesome. All right. So let's see. I think that was everything. Like I'm looking at our time and saying, you know, there's so many things that having a financial edge does for people that sometimes we forget the power of learning something different and doing something different. I'll also just point out, if any of you know people that have, especially realtors, this is what I find. It's not until people get ready to buy a home that they really find out if they're in need of more severe debt relief, debt settlement, tax abatement. We run into all kinds of things, and the membership does provide access to professionals. So before you call it quits and give up, do something drastic like bankruptcy, see if the professionals can help you. Because once you declare bankruptcy, you're saying, I'm not buying a house for at least the next 7 to 10 years. Make sense?
Yes.
So with all that said, I think we recapped the steps already. All 7 of the things that we need to do to get our house in order. And the best thing that we can have is a team of experts to help us with each of the steps along the way. And then to be in a position where we continue to learn, and by learning, do more and different things. Now, there's a part 2 of this webinar coming up Thursday where we talk about money, strategies, and continuing education. But I do need for people to understand that there's an opportunity to make money doing what we do. So let me leave this slide up and let this be how we describe it. Let's talk about this for a second. For all the things we've talked about so far, it was all about cash flow expansion. It was getting your money back, putting your money to work, doing different things so that you could turn around and have that money make more money. But would you believe that they pay us to teach people how to do that? I mean, we don't even have time to talk about how compensation works or level of investment, but it's 2 places you can get going. Either $79 just to have the team help you, or $228 to help this team help you generate an additional income. And when I mean additional income, I mean additional substantial income. You have people right here on this line making as little as $5 a day and as much as $150 a day. You have people who have luxury car bonuses being extended by the company because as you help people, as you teach people how to grow and build themselves and their fortunes, they start taking things off your plate because they are focused on helping you make wealth real faster so that you can be the example to show other people how it gets done. So if you're interested in getting the assistance from the experts in making wealth real for you, it's always 3 categories of people. Category number 3, looked at what Dana, Stephanie, Yaz, Natasha, and I have shared, and they said, thanks, but no thanks. I'm going to keep trying to do it by myself. And I received that. Pastor say you got to receive things. I receive it.
Good luck.
If it's not for you, refer someone who would be open to having help with the most important aspect of their life is their money. Does that make sense? Mm-hmm. Category number 2 says, I want the edge. I'm not sure about the income piece or how that works. You got to explain that to me in more detail for me to be sure which one I am. So here's what we're going to do. We got several income shifting conversations throughout this week. Text, email, send a smoke signal to the person that invited you to tonight and let them know I want more. And we'll put you on a course that matches with what you want, where you want to go, and the best part is we'll help you do it. Does that make sense? Yeah. So on behalf, well, let me ask, are there any questions in the chat? I wasn't monitoring the chat at all. Were there any questions? I do want to make sure that we close with no questions.
No, just shout out to the chat. The chat looks pretty good.
Okay. So this is my last question. If you're a real estate professional, last question I ask everyone is, what would it be like as an agent if everyone came with you with a 780 to 850 credit score? Debt to income ratio, 5 times income. 5 times debt in monthly income. And they had their full deposit in a cash equivalent ready to go. How many of you want that client? Well, my mentor taught me, we don't get what we want. We attract what we are. Let's give ourselves the edge. Let's get our credit, our money, and our wealth on point, and you'll be amazed at the circle of people that starts being drawn to you. And then you too can make wealth real because you've already done it. That's my time. I'm Richard Hardon. I'm Bertie and Richard's biggest baby boy, saying, if you want to make wealth real, you want to be a wealthy realtor, invest first in yourself, in your team, in your mindset and your plan, and that's how we win. Peace up. Hey, down.
Hey, down. Thank you.
Great
job, everyone. Great job.
Awesome, Mr. Richard. Thank you, Miss Yaz. Thank you, team.
Yes, thanks
Great
everyone.
job.
Good job, Dana.